side to the other. This audiobook is about that rope. In the contest between inflation and deflation, the rope is the dollar. The dollar bears all the stress of the opposing forces and sends that stress around the world. The value of the dollar is the way to tell who is winning the tug of war. This particular tug of war is actually a full-on currency war, and it is not really a game, but an attack on the value of every stock, bond, and commodity in the world. In the best of all possible worlds for the Fed, asset values are propped up, banks get healthier, government debt melts away, and no one seems to notice. Yet, by printing money on an unprecedented scale, Bernanke has become a 21st century Pangloss, hoping for the best and quite unprepared for the worst. There is a very real danger that the Fed's money printing could suddenly morph into hyperinflation. Even if inflation does not affect consumer prices, it can show up in asset prices, leading to bubbles in stocks, commodities, land, and other hard assets. Bubbles that are prone to burst like tech stocks in 2000 or housing in 2007. The Fed claims to have the tools needed to avert these outcomes, but those tools have never been tried in these circumstances, or on such a large scale. The Fed's remedies, higher rates and tight money, are likely to lead straight to the kind of depression the Fed set out to avoid in the first place. The U.S. economy is resting on a knife's edge between depression and hyperinflation. Millions of investors, business owners, and workers wonder how much longer the Fed can balance the knife. Worse yet, none of this happens in a vacuum. If the Fed's policy manipulations were limited to the U.S. economy, that would be one thing, but they are not. The effects of printing dollars are global. By engaging in quantitative easing, the Fed has effectively declared currency war on the world. Many of the feared effects of the Fed policy in the United States are already appearing overseas. Printing dollars at home means higher inflation in China, higher food prices in Egypt, and stock bubbles in Brazil. Printing money means that U.S. debt is devalued, so foreign creditors get paid back in cheaper dollars. The devaluation means higher unemployment in developing economies as their exports become more expensive for Americans. The resulting inflation also means higher prices for inputs needed in developing economies, like copper, corn, oil, and wheat. Foreign countries have begun to fight back against U.S.-caused inflation through subsidies, tariffs, and capital controls. The currency war is expanding fast. While Fed money printing on a trillion-dollar scale may be new, currency wars are not. Currency wars have been fought before, twice in the 20th century alone, and they always end badly. At best, currency wars offer the sorry spectacle of countries stealing growth from trading partners. At worst, they degenerate into sequential bouts of inflation, recession, retaliation, and actual violence, as the scramble for resources leads to invasion and war. The historical precedents are sobering enough, but the dangers today are even greater, exponentially increased by the scale and complexity of financial linkages throughout the world. Baffling to many observers is the rank failure of economists to foresee or prevent the economic catastrophes of recent years. Not only have their theories failed to prevent calamity, they are making the currency wars worse. The economists' latest solutions, such as the global currency called the SDR, present hidden new dangers while resolving none of the current dilemmas. Among the new dangers are threats not just to America's economic well-being, but to our national security as well. As national security experts examine currency issues traditionally left to the Treasury, new threats continually come into focus, from clandestine gold purchases by China to the hidden agendas of sovereign wealth funds. Greater than any single threat is the ultimate danger of the collapse of the dollar itself. Senior military and intelligence officials have now come to the realization that America's unique military predominance can be maintained only with an equally unique and predominant role for the dollar. If the dollar fails, America's national security falls with it. While the outcome of the currency war is not yet certain, some version of the worst-case scenario is almost inevitable if U.S. and world economic leaders fail to learn from mistakes of their predecessors. This audiobook examines our current currency war through the lens of economic policy, national security, and historical precedent. It untangles the web of failed paradigms, wishful thinking, and arrogance driving current public policy.